feels like this time is different. I've never seen anything like this. The resiliency, the strength. Sunday night, the market, bang, it goes straight down. And then I look 5 minutes later and it went from silver down 50 cents at the open to up 50 cents in a matter of minutes, up $1. And gold down 20 to up 20. And then yesterday morning in Shanghai, silver opened up 7% limit, it triggered the stops in Shanghai, and they stopped it. It went straight up 7%. Silver was up 10% last week. Gold was up 3%. These are moves that in 34 years I've never seen.
In today's news recap, silver to ride coattails of gold's record prices. Silver has the most potential to benefit from a sustained rally in gold among the precious white metals, reckon UBS analysts. Silver has started to gather some attention in early second quarter following the relentless rally in gold to new all-time highs. With many investors caught off guard by the speed and magnitude of gold's ascent, silver has been offering market participants a chance to catch up. We think it is still early days, with silver's year-to-date outperformance still relatively muted compared with its historical behavior. Investment demand and green technology trends could help to drive silver's demand. UBS added, as could wider risk on sentiment in the wake of interest rate cuts, while higher volatility is likely to also attract more active investor participation. Now we'll show you more clips. Like, subscribe, and share this video with a gold bug to support the channel. Let's get back into the video.
Eastern price fixing per se. I mean, let me simply say this, that in order for a new system to work, it will have to be transparent. It will have to be fairly priced. It'll have to be more of a cash and carry market. So when they were deciding how do we design the COMEX, if they made it a cash and carry market, the price of gold and silver would be much, much higher, and the price of the dollar would be much, much lower, just supply-demand fundamentals. Instead, they decided to make it highly leveraged, where multiple claims on a contract, and you don't even have to pay for it. You can make believe to pay for it by having money in your margin account. And so this created an environment of tremendous leverage and rehypothecation. If it's a cash and carry market, largely like the Shanghai Exchange is, they do have a futures component, but it is largely cash and carry. Then the supply-demand fundamentals come into place. You know, I guess it kind of bothers me that there are a lot of people out there that I think are probably even smarter than me, that I respect a lot, that dismiss entirely the concept of the BRICS. Everyone focuses too much on the common settlement currency. That is a mistake. It will happen when the time is right. Look, 36 more countries have formally applied. You're talking 46 countries potentially. They probably won't all make it, but north of 40, maybe 50. Who knows how many countries are admitted in October? You're talking the majority of human population, larger swath of global GDP already. Most of the rare earth commodities, most of the precious metals, they control everything you need, more of it than the West does, and not to mention bigger military might by far, 2 of the 3 largest nuclear arsenals, all of that stuff. People focus too much on the common currency because what they have been doing, and this is why there's such a rush for gold, because I believe they need the gold to transact business now cross borders. So I'm going to give you a few examples. But what they've been doing is trading in local currencies. Like example, Brazil, the second largest exporter of corn in the world, is now selling corn and soybeans to China for yuan, and probably taking that yuan and converting it into gold on the Shanghai Gold Exchange for immediate cash and carry. They get kilo bars of gold sent to them. So you don't need, so with all of these countries using their own currency for settlement, or the deal that Iran struck with China to modernize their biggest airport, they're paying for it in oil. They're not paying for it in dollars. So all of these deals that are being set with local currencies chips away at the settlement value of the dollar. And everyone's come back, well, the bond market is the most liquid and deep, and this bull crap already with the bond market. The bond market's a bunch of nonsense. And I'm going to read some stuff to you about that. But how's it done over the last year and a half? with the bond market. And do you know that there's a deal right now going on? Well, let me get to the bond market in a moment, because it's a big part of everyone's pushback against the BRICS. Oh, the bond market, the bond market, the bond market. Part of the reason they they say that is the petro deal. The proceeds of all the money that was paid in dollars for oil, the excess goes into the bonds. Well, who's been selling the bonds? Oh, yeah, that's right. That's those countries. And what have they been doing with it? Well, they've been buying more gold than at any time ever. And so as they shed bonds, they're buying gold, which has not only massively outperformed the bond market over the last decade, massively, but has no counterparty liability like sanction and confiscation risk, no default risk. As Doug Casey has always said, it is an asset that is not simultaneously someone else's liability. They are replacing bond holdings with gold holdings. They are replacing dollar settlement with local currency settlement. In essence, it is a new currency without it being a new currency. Every other country in the world just about has remonetized gold already. It is remonetizing. It is taking on a different viewpoint. But when we talk about the bond market, which has been just a joke recently, as we know, I want to read to you something that is deplorable, and not enough people are talking about this, but here it is right here. Okay, so I'm going to read it straight up. The International Swaps and Derivatives Association, ISDA, is writing to the Board of Governors of the Federal Reserve System and the FDIC, the Federal Deposit Insurance Corporation, and the Office of the Comptroller of the Currency to urge the agencies to implement targeted reforms to the supplementary leverage ratio, the SLR, and enhance supplementary leverage ratio framework. Blah, blah, blah. It says, it calls for the exclusion of on-balance sheet U.S. treasuries. In other words, what they're trying to do is say, you can load up on as many treasuries as you want. It's not going to be included in the leverage ratio. Well, how did that work over the last couple of years with the banks who loaded up on treasuries and then interest rates went up and it put banks out of business and has a whole bunch more teetering, or the insurance companies teetering with these toxic bonds? And so basically what they are saying is the reform is seen as crucial to preserve the resilience of the U.S. Treasury markets, the U.S. economy, and the international financial system at large. The bond market's a bunch of crap, and it's hanging on by a thread. And the rest of the people in the world see it for what it is. It is a tool of suppression. It is a tool of the ability of the West to run sanctions and to confiscate. As Janet Yellen said in Brazil, we need to confiscate this money and use it to fund the Ukrainian war effort. So, look, as far as I'm concerned, the rest of the world says, why the hell would we ever buy these bonds when this is happening? When they can, not only when they can take our money and freeze it and sanction it, but it's performed horribly. It has all of these risks, including, default risk. None of that applies to gold, and the rest of the world is accepting gold and accumulating gold, which is what? Oh, yeah, the only other tier one asset. And they've lost control of the pricing, so much so that China and their market is willing to pay a 10% premium for any silver that the West is stupid enough to give away. And one other thing, when we talk about the ability to trade with one another, a lot of stuff happens and no one is hearing about it. Let me pull up another quick article here that, again, what was one of the first things I talked with you about? The Chinese Belt Road and Rail Initiative, the largest infrastructure project in human history, 75% of human population, north of 50% of global GDP already. How many people have heard this? Probably no one. Here we go. The Chinese government has just launched a new public blockchain infrastructure platform led by the Confluence Network. The platform, dubbed Ultra Large Scale Blockchain Infrastructure Platform for the Belt and Road Initiative, aims to offer an underlying public blockchain for cross-border applications, according to an April 1st post by the Confluence Network. The main focus of the project is to create a public blockchain infrastructure platform that will be able to support the implementation of cross-border cooperation projects along the Belt and Road Initiative. What did we just see in late 2023? The first ever cross-border digital gold trade using the digital yuan. So when people talk about the SWIFT and the dollar and the bond market, they are just macro trends, people at the very end hang on too long. And this is going to create, I believe, a religious experience for these people who believe that this can't happen, that the West can never. Look at all the stuff that the West has done that you look and say to yourself, I never in my life thought I would see anything like this in this country. And yet it's all around us. Everywhere we look, socially, morally, economically, religiously, politically, geopolitically, everywhere we look. And then look at the ridiculous behavior around the world we have, weaponizing the dollar and behaving the way that we do in a very hypocritical manner, according to the rest of the world. But yet this can never happen. It's such a mistake to believe this can never happen, focusing on the bond market, the bond market. The bond market's a joke. And these people know it. They know it. And if you ask me, there's a damn good chance that the bonds are rehypothecated just like the gold is too. And this is the rallying cry. And so these countries don't need a common settlement currency right now today that everyone focuses on to disrupt the apple cart. No, you trade with one another in local currencies and you accumulate as much gold as you can. And you are then destroying little by little by little by little the settlement status of the dollar and little by little by little by little the reserve status of the dollar when you exchange treasuries for gold. And I'll tell you what, it's happening. And this goes right back into what I was saying about why it's different this time. The world does not want our bonds and our dollars, not so much because of its performance or lackluster performance, but more so because we have proven to the world that if we do not align ideologically with you, you're in trouble. That was the death knell of the dollar. And that's why I keep coming back to the fact, is it too stupid to be stupid? It's planned. And, look, Dunning, and I don't know, man. I just try and put it all together. But when I put it together, it just, red lights are flashing. Like, how the hell could this happen? Are they that stupid? No, there's no way they're that stupid. And it's just the same way, like letting the border be wide open. Are they that stupid? Or could they? No, they're not that stupid, but they're that awful. And I think people need to wake up. And the people who I respect a lot, I'm not going to mention names. I'm sure people know who I'm talking. These are people that have done more for me and I love and I care about and I think they're great. But to focus simply upon recency and normalcy bias and the fact that the bond market is liquid and there isn't anything like it and the dollar is everywhere, so what? Everything comes to an end at some point, and to not embrace and realize what is happening right in front of you is just like going to court with your attorney and you're being falsely accused of murder. And your attorney said, we don't need to know the plaintiff's argument. We just need to know your argument. And by not looking at the other side with an open mind, I believe will be a very, very, very bad decision by a lot of these people in the end when it happens.
Silver set for banner year as investors bet on precious metals. Silver crossed $28 per ounce this week and is seen reaching as high as $32 by the end of 2024 amid expectations that interest rates in the U.S. could stay higher for longer. In part due to safe haven demand amid geopolitical tensions, the silver price, which is about 40% below its $48 per ounce peak in 2011, has jumped along with gold prices in recent days, with gold hitting an all-time high price of $2,365 per ounce on Tuesday. Silver started to move in earnest last autumn, rather like gold, just as financial markets started to wonder whether the U.S. economy was running hotter than expected, with the result that inflation could run higher for longer than expected, a view which gained further currency last week with the strong American non-farm payrolls numbers. Throw in rampant U.S. government spending and how inflation on the other side of the Atlantic seems to be reaccelerating, and investors and traders may be on the hunt for stores of value once more. Mould believes silver may catch the eye of contrarians even more than gold, which is at new all-time highs above $2,300 per ounce.
I've had the luxury of spending some time with him right before he made this, or right after he made this announcement, and talk with him about it. And, he'll be right. Just like I've been saying forever, for 2 years before he said it, that the Shanghai Cooperation Organization and the Eurasian Economic Union will join, and they will. The president of Belarus is calling for a summit to make that happen, to join the BRICS. The reason they didn't do it and issue it is exactly what you're saying. They needed to have the infrastructure in place. So 10 countries is impressive. How about 36 countries? How about 46? How about controlling the Red Sea and the Straits of Hormuz, which I think it's Congo, I think. My geography is horrible. But when you add in, and I know that they have applied, so when you add in Ethiopia and Saudi Arabia and Egypt, and they control the Straits of Hormuz, they control the Red Sea, they control the shipping lanes. Look at the infrastructure that is connecting all of the bricks with the Belt Road Initiative and the North-South Corridor and all of these things that will allow transportation without interference by the U.S. Navy. It is a massive, massive undertaking that is accelerating. It's been 17 years in the works, but it's accelerating, and you can see things coming together, and you're right. And that's why I wasn't bummed out by it. I can see it very clearly. It wasn't time. And in crypto speak, they say mass adoption when the time is right. And that's exactly what you said. People say, I don't see anything. Well, our media does such a poor job of talking about this stuff that when I talk to people, they don't know what any of this stuff.
Let me interject. The media does not do a poor job. The media does an excellent job of not talking about it.
Right.
They do what they're told.
Right. And so you wake up one morning. That's why I've always said on a Sunday night, Monday morning, we wake up to the all at once moment. I really love how you added color to that. And it's very, 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 very accurate. And I think that is what is happening under the scenes. And this is why I take exception with people that are smarter than me that completely poo-poo this, because it's a huge mistake. It really, truly is. And that's why I love Luke Gorman. I think Groman is his name, I believe, because this is a guy that's smarter than the whole room, and he understands what's happening, and he talks about it. And you don't have to think that the bloom on the rose of the U.S. dollar lasts forever to be right. And you can still be a patriot like I am to understand that we're in trouble, and we are in trouble. And so I compliment you very much. It was really interesting what you said. I did want to also mention something just completely off topic. If we're done talking about this, talking about what gold is doing, and if we take a look at the last 3 times that we saw the end of a Fed hiking cycle and the beginning of possible cuts. Now, I don't think they're going to cut. I've been very consistent at saying that. First, they went for 3 or 4 cuts, and then, we'll do it in June. And, now we may not even do it if inflation stays sticky or whatever. They're a bunch of liars. But let's just talk about what happened the last 3 times, okay? In June 2000, the Fed completed its last rate hike for that cycle. Gold appreciated 47% in the next 4 years. In June 2006, the Fed raised rates for the last time in that cycle, and gold rate was 50% higher within 2 years. In December 2018, the Fed finished that rate hiking cycle. Gold was 47% higher by the end of the third quarter 2020. In all 3 instances, the central bank pushed up the front end rates and then broke something. So is it going to be different this time? Do you see what gold is doing right now? Gold's up $200. Let's see what it is. It's up $8. It's about $240 or $50 in less than a month. And so this is happening. And what are they doing to try to hold it back? Well, they're having less success on COMEX because it's just less success. Let's just say there's not enough metal or whatever it is. Now they're going to the lengths of trying to short the ETFs. Some idiot last Friday shorted 12,599,986 shares of SLV last Friday. That's $288 million in one day, one person. Well, silver's up today, and it was up big on Friday. It was up big yesterday, and today it's up. Today it's down a few cents. Was up, but the point of it is that how much money did it cost that person, and who would do something so stupid? Why? These are not normal times. These aren't, and I don't know. I just will tell you, in my soul, I truly believe that this is going to end up being the beginning of a sustained rally. I hope I'm right. I could be wrong, but to say $3,000 gold by the end of the year and $35 silver or higher by the end of the year is not outrageous. And I'm never the one to ever come out and say these kinds of numbers, but when you look at the way that it's moving and the strength that is showing and the arbitrage that is going on in China and the election and the BRICS meeting coming on at the end of the year, I think people need to take a step back and look at this for what it is. And maybe this time, after all of these years of watching them come in and smash the price of gold just when it should be going higher, well, maybe this time is different.
What's your opinion on Schectman's point? Will gold have a consolidation phase, or will it continue to blast through new highs? Post your price prediction for gold and silver in the comments section and watch this video right here because it's a perfect fit for you.